Hey guys, how's it going? Welcome to the weekly Watch This Breakdown. Hope you all had a fantastic weekend. So yeah, let's just dive straight into Euro Dollar. Take a quick look at the higher time frames, or kind of really just digging down into the last couple of days at the end of the week price action, and then we'll look more at the forecast. Now, the last couple of days of the week, well, actually, just kind of generally most of last week, but particularly the tail end, I did catch quite a few losses and missed a few big trades as well. But yeah, I kind of just want to show you those. I have weeks where my strike rate is absolutely dog shit, but the beauty of this strategy is we already know we can take quite a few losses and make it back and a hell of a lot more with the next trade. And also we don't have to wait weeks for those setups to come. You can literally wait another half an hour to a couple of hours, or maybe that's just the next trading session, and those opportunities arise. So yeah, last week was a pretty good example of that, kind of just the real obvious benefits of this strategy with typical psychology things that you can expect to experience with trading. So yeah, I'll tell you what, we'll just go over Thursdays and Fridays price action, and then we'll look at more of the higher time frame forecast. So obviously looking for the higher time frames are heavily bearish, right? But there's the potential, we're very, very low down in the daily leg. The 4 hour obviously switched bullish going into, I believe, Wednesday or Thursday, giving us a sign, right, that the 4 hour switching bullish, that we could be having that steeper daily or potentially even a weekly pullback as well. So there's obviously a fair amount of potential for this to move to the upside, but whilst remembering that it would still be a higher time frame, or at least a daily and a weekly counter trend pullback. But in terms of for more sort of intraday basis, 4 hour switch bullish, higher time frame trend from the 4 hour perspective is bullish, but coming into obviously a pretty big area of supply here. And there's the possibility to play shorts down and towards this region for demand to look for that higher low. Now, coming into, I believe it was Thursday, we obviously, as soon as we broke bullish, we came into this area of supply. We had a minor bit of a reaction, but then price pushed and closed up above that reaction, creating a flip zone, right? But as it came off this pretty strong supply zone here, it was a sweep zone as well, took the liquidity behind these equal highs. Price then came into here and pushed straight down. So this flip zone didn't hold here, and this is where I took quite a few losses, trying to kind of catch a quick little high low to potentially try and push this further, or try and anticipate that this reaction here, so this reaction from this supply zone, I was trying to buy within here, anticipating that might be a failed reaction, and then I could get long and try and anticipate that this was just going to keep going. Because very often with euro dollar, when we get that first initial trend change, it tends to have a pretty decent reaction, and or a pretty decent run, I should say, and that those sort of near supply zones just tend to create little reactions for price to continue pulling up before we kind of get that steeper pullback. So kind of just to go over that quickly again, we had this flip zone occur here. Price was coming off an area of supply, and as it came down into this area of demand, I believe it was Thursday's New York session. Thursday's New York session. This is where I was trying to get long, anticipating that this was going to be a failed reaction, and we may continue up from here. But yeah, nonetheless, it didn't work out. In the end, we ended up getting that chock, that 4 hour chock / M15 bearish trend change, and then we came back into supply, and it gave us some beautiful short opportunities on Friday afternoon. And that's exactly what I was just saying there, right? You can take quite a few losses, get on the wrong side of the market, and then pretty much that same session, or maybe the next session, or maybe even just the next trading day, which isn't that long to wait, you can get some beautiful opportunities just to trade in the correct direction. So that's kind of how I viewed the 4 hour chart going into Thursday and Friday, and then 15-minute. Just sort this out. So on Thursday morning, M15 was still bullish at this point. This here was the 4 hour break of structure. So the 4 hour had just switched bullish, and the M15 was bullish as well. And then it was pulling back into Thursday morning. And I was simply just waiting for price to come into this M15 flip zone here, right? It came off supply, turned into demand, had nice liquidity building. And I just had my alert set there, but pretty early, pre-Frankfurt, it kind of swept this low here, and it just came off the M30 demand. So just remember, M30 is basically just going to be taking the whole range rather than the refined M15 candle. So that's essentially what it was reacting off, right? And that's the M30 demand, those two M15 candles. And then there was a beautiful M1 entry, and I just wasn't on the ball, kind of a little bit attached to my bias of waiting for the trade to come down here to then try and anticipate that next move, or at least targeting the next M15 high, right? Now, I'll just quickly show you that entry on the M1. Just line these back up. So it's this move here, right, on 14th of October. I believe that's a Thursday, if I'm not going crazy. And then we scroll across, not that far, going a couple of days, come on. Here we go. No, that's not it. I'm lost now. Here we go. There we are. Got there in the end. So this move here, essentially just to quickly go over that again, M15 was bullish, 4 hour had just switched bullish, right? We'd just broken up above this high. Price was then pulling back during Asia, coming off old areas of supply. We had this real nice flip zone down here, and I was just looking for price to come into this, kind of start of Frankfurt/London, and I just had my alert set on that zone, and I was kind of just not really paying too much attention to this, kind of saw it as potentially a bit of a fake early move, just to generate liquidity for price to then actually sweep, to generate liquidity there, sweep that move, come into the refined zone, and then we'd get our entry and go, right? So yeah, a bit of a mistrade there. Now, what I will say is this isn't a mistrade for you if in your training plan, and I talk about this a lot in the course, but in your training plan, if you don't have kind of range supply and demand zones in your plan, so if you always take a refined zone and maybe you're very strict and you only use certain time frames for your zone, right? So maybe you will only look at 4 hour, you only look at M15 for your actual POIs, and you don't cycle either through the time frames or you don't trade the whole range, and you just take the refined candle, then yes, technically this is not a mistrade for you because it didn't meet your plan. So that's absolutely fine. But for me, I'm kind of happy to use both refined candles and take the whole range, which essentially is the same as cycling through time frames to refine your zones. So for me, that kind of is a mistrade there. So we can see the M1 supply, right? That buy to sell price came into the supply. It failed to make a lower low, did it? Well, technically, actually, just looking at that now, it did just about close below. So technically, it did do that. But kind of reading between the lines here, you can see that is where the demand came in, break that structure there, and then we had a nice pull back in, create those equal lows, sweat those equal lows, and then price went off there and had a real nice move to come up and mitigate this inside bar. Or the whole inside bar range, whichever way you wish to view that. So yeah, that was a pretty decent trade there, missed the longs. But then we came up into this 4 hour area of supply, this inside bar, and we hit this really nice M15 supply zone, refined within that 4 hour zone. So obviously took liquidity, coming off this area of demand, and then pushed down. So that was a really nice sweep zone there. And I believe at the time there was also, if you go and, I won't do this now, but if you go and look in there was a super nice M1 zone within there as well, which price literally tapped to the T. So this is another perfect example. Well, it's more of a reversal, but if you're happy to take reversals of kind of those M15 entries, right, even just down to that low, there's overrate R there, but if you're obviously trading that from the 4 hour supply zone, you're trying to anticipate that 4 hour pullback to push down into here. So of course you can target further. But with price coming into this area here, so towards the end of the London session, after kind of missing that bullish move, take a look on the M1. So I wasn't really too interested in trying to catch continuations this high up in the kind of the higher time frame leg. So so you can see the red zone here. This was an M1 flip zone. I'll tell you what, let's go take a look. Scroll back. So here you go. It's kind of that last point of demand, right? Price came in, reacted, pushed down. Just a pretty typical flip zone nested within there. So we scroll back across. Boom, there we go. And yeah, for me, this didn't give me an entry that really met my plan, because obviously price reacted, it came into demand, reacted, pushed up. We need to wait for this low to get taken to get our change of character. And then for me, this was the whole buy to sell, the supply that broke the demand. So I was looking for price to come into this region here to get short. But in the end, it just reacted from a 15-second decisional flip zone. Now, again, the way you could have seen this on the M1 is if you don't trade the whole range, so if you need to see like the refined, either you have it drawn like that, a single candle, or maybe you want to see candle engulfed and you take the wick or something like that. All right, this is where the reaction occurs, okay? So you can see price comes in, that buy to sell wicks, that's the reaction, demand trying to hold, and then that's the supply stepping in, and then price just came straight back into it, tapped and went. So technically there was an entry there, but for me it's way too aggressive. I know, I'm not too bothered about liquidity in terms of my flip entries and stuff on euro dollar. I'm not I don't get too caught up in that. But for me, this is like, it's got not a lot going for it in terms of, there's no liquidity sweep. It's just really, really aggressive. I'm not really too caught up about that one because it didn't give an entry. But that hard time frame POI was literally perfect if you did want to take a risk entry there. Then price obviously pushed down, and we had this level of M15 demand. But as you'll see in my markup for Thursday's session in the Discord, I didn't have this POI marked up because I didn't want to trade from it. I knew it was there, and a lot of times as well, if I see a POI and I know it might give a tradable reaction, but I know it's not that great, I usually won't mark it up, because if I do mark it up and then I'm looking on the M1 and I see price coming into it, it just increases FOMO for me that, suddenly my brain thinks it is, a decent area to trade from. I've got it marked up. Potentially it gives an M1 entry model, and you can look to get involved. And I just don't want to tempt myself. So yeah, typically if I don't think that POI has got enough really going for it for me to want to risk my capital on, then I just won't even really bother marking it, just to kind of leave that temptation there. But yeah, I just kind of thought I'd share that if that's a tip that maybe might help some of you. But yeah, I guess the main reasons why I didn't like this particular M15 POI here is it's quite high up in the leg. It's roughly the EQ, so premium discount, arguably it's there. But we were coming off this area here, right? This area of supply. We'd had our 4-hour break of structure, so I know a 4-hour pullback could be imminent. Also, if we take a look at the daily chart, we had our daily change of character, but if you kind of look at this more minor swing, right, price came down, it kind of pulled back here, and then that's pretty much one leg, and then price at that time was kind of coming into this area, right? Minor high here, there's a bit of daily supply still, and we could continue that overall daily move. So it's kind of another area where in favor of the bearish case, right, that I don't really want to be trading against. I don't want to be buying high up in the leg. This zone wasn't a sweep zone, it wasn't a flip zone. For me, it wasn't really a valid flip zone. All it did was break this very, very minor structure. So it didn't really have a lot going for it, and I was much more interested in, obviously, this being a sweep zone, the extreme, nested within a 4-hour flip zone, a hell of a lot nicer. And then this one here, this was the other zone that I liked. It wasn't amazing. This is kind of like a meh zone. I don't know how to describe it. It's a bit average. But, arguably this is a bit more kind of, the decisional that actually broke the M15 high there. Because, the previous candle, it only wicked it didn't break enclosure, but this one kind of had. So arguably within the wick, there was the demand here that caused the M15 higher high. It was an inside bar, but yeah, there's no liquidity, right? It didn't take any liquidity. So it wasn't the best zone, definitely this one down here. But I took a trade from here and a trade from here. Both ended up being losers, but kind of just wanted to explain why I wouldn't be that keen to get long from here. But what we did get is we did get that M15 change of character. So we came off the 4-hour supply, the refined M15 and M1 supply within here. We then got that M15 change of character. So now it's go time to try and look for the short. And that was what I was a lot more interested in, is to play the short from here back down in towards these lows to then potentially look for the long, right, to push this higher up. But with the potential that this could obviously, which is what we ended up getting, right, get that M15 trend change to then anticipate that 4-hour deeper pullback. So yeah, that's why if you are going to kind of take those counter M15 and counter 4-hour trades, right, because you're trying to short against the bullish trend, these are the areas in which to do it. Once we've come off a refined supply zone and we've had our change of character, so the internal structure is now aligned with that counter trend short you want to take, but also because of the area you're trying to take it, you're trying to take a counter trend short in an area that could turn into a pro trend trade. So bit of a mouthful, but what I mean by that is, yes, at this point you're trading against the M15 and the 4-hour, but where are you doing it? You're doing it in this area where it's likely the M15 could turn bearish to then start that deeper 4-hour pullback. So hopefully that makes sense. You're trying to stack as much odds in your favor there with much higher risk reward, rather than just taking counter M15 and counter 4-hour trades just in any old place. But yeah, having that change of character as well there definitely gives you another tick in the box. So that was a position I was looking for, which is this M1 pullback here. But again, I was being, don't want to say lazy, but I was working on other things for the course and the website and stuff, and I just had my alert set on the M15 POI, which is obviously this blue box up here. But price just pulled back up in around kind of the London lull, around midday, yeah. And it just rejected the M30 zone, right? So obviously if you were to take the whole range or the two candles, that's your M30 zone. I just didn't really simply have that drawn on, and I just wasn't really on the ball. But there was an entry there if, again I say this, if range trading or using multiple timeframes for your POIs is within your plan, and you get your setup, then what do we have? We have this as our last area of demand, right? Price comes down into it. It reacts, it fails to put in a higher high. So then once we get a break enclosure below there, and we get our chock, right, with the wick below there. So yeah, once we get that, this then becomes our supply zone, right? The supply that caused the reaction to fail, and then boom, there's your short. And there's a pretty tidy trade there if you were on the ball. But essentially, I was looking for that price action, but just a little bit higher up within the M15 POI, or obviously coming into that refined buy to sell that still had not been mitigated at that point. So price then came down into that first M15 POI, this inside bar here, right, to potentially look for that sort of bit more aggressive high low, but it is pro M15 and 4-hour trend still at that point. We came and mitigated the extreme, the M1 extreme nested within. We came up into our supply zone. We reacted. We then got the change of character and the failure of supply. So supply flip into demand, and then basically took along here and got stopped out, and it ended up coming for the extreme there. So is what it is. One of the kind of those liquidity plays, right? This move here didn't take any liquidity, and it had no inducement in the leg, and ended up being liquidity for this move down here. Now, if I was trading pound dollar, probably would have been a lot more likely to want to look to get my entry long from down here rather than the decisional, but this is kind of one of the main reasons I prefer EU. It's a little bit less of a bastard trying to sweep you all the time, right? So that's why, yeah, I kind of prefer EU, and it's kind of my main focus. And I think in this case, I wouldn't, at least me personally, when I'm reviewing this, I'm not getting too caught up on it. It is what it is. Only other kind of negative confluence I could find for this trade, was that it was right on the open at 1:30 when there was high impact news. Not really that high impact, it was just PPI, US PPI, but often you can get wider spreads, but lower liquidity, and price can chop around a bit before kind of the move starts to go. But even if I had stayed in that trade, I don't think even ran 4 hour with this high here, so eventually would have been stopped out there for a full loss either way. So is what it is. Not the most amazing trade in the world, but yeah, if you did take that, it's definitely a valid loss if your plan is somewhat similar to mine. Then we pushed down further, pretty choppy and kind of crappy slow price action at that point, but we came down into our extreme M15 demand zone, so this POI nested within here, right? We not the best, but we slept some equal lows there, not the most amazing lows. And then essentially the flip I took, so there was a cleaner 15-second one within here, or 30 seconds, but for me that wasn't personally valid on the M1. I'll talk to that in a second, but this is the way I viewed it. Is I look for price to come in, I look for price to pull back, and I look for the first reaction, because for me that will validate where the supply is that price is reacting to. And it was obviously then reacting to this supply here, right, the buy to sell that broke the low there. So then what do? Mark out the reaction point, because at this point for me we'd already had the chalk. I'm just looking for supply to fail. So for me the chalk was with I'll mark it out, the inside bar. That was the first high that went. So I'd already had the M1 chalk, I'd had the higher time frame mitigation. Now at this point all I am looking for is for this reaction point to fail, and I want to see that breaking close above. So that's when we got it, and then that's when I just took the decisional. Now another kind of tick in the box of why I was happy to take the decisional in this point is because if you kind of look at the order flow, all right, you can see price starting to kind of make those mitigations, make those internal higher lows, and then once we broke up, for me this was kind of the last point that was going to have to hold if this was going to go up higher. So I entered on this this zone here, and obviously you can see got stopped out there for a loss, but that for me was valid. More than happy to take it in that area, because as I always say, if you are going to get long, this is the best time to do it, right? You're at that last point of demand that's going to hold if this range is going to stay bullish, but you're getting in at the last point of failure. You're getting into the nearest place in which you can be wrong, right? Which is kind of really the aim of the game with trading. So yeah, ends up being a loser, and that's when we switch bearish. So okay, that's fine. Now we switch our bias, and we can look for some pro M15 trend shorts, right? To anticipate that 4 hour pullback. But before I go and look at the following day's price action, I just want to quickly kind of point out, get rid of all of these, kind of the earlier entry you could have got in, but ultimately it probably wouldn't have made much difference to your overall result. But essentially, all right, price came into there, that only wicked the low, but on the 15-second probably closed below the low. So then that would be your 15-second supply, right, with price coming into it, reacting and then pushing up, and then that would be your chalk and failure, and then that would be your demand that caused it. And that's how you could get into that, reading that on the M1. So it's pretty messy price action on the M1, but the minute price touches your POI, that's when you can get a bit more aggressive if you want. But if you're being very strict to what a true M1 entry was, the entry I just showed before that, really for me, I think is what the valid flip would be there, if you're not trying to use the M1 to read the 15-second, that is. So now we switch bearish. Now there was a long opportunity you could have taken here from that original POI that I was waiting for earlier that morning. This is what I mean. It's you just leave your entries here on your risk entries on the M15 zones. You can do pretty well with a hell of a lot less stress, and just just not having to be glued to M1 looking for the entry when price is within your POI. So yeah, we end up getting a nice sweep of liquidity, big push up, and then just a standard, back mitigation of that sweep zone if you were looking for that entry. But what I want to focus on is Friday's price action. So coming into Friday morning, we'd had a pretty decent push up during Asia, and at this point we'd already kind of mitigated, see about 4 a.m. this supply zone here, and we'd already started to react away. So really at this point, I'm not a big fan of then trying to short from here, because once we then break and close above this high here, what's happened? Well, the reaction's failed, right? Because this is supply. The supply here is trying to make a lower low. Price pushes up, it's failed. So now this tells me that this supply was simply a reaction to do what? To provide liquidity, right? Those equal highs for price to push higher. And that's why I was then waiting for price to come into this extreme zone, that original zone I was waiting for the previous day, to look to get short, because we now had the M15 switch bearish. It's pulled back up into the extreme. We've had inducement, and now we can anticipate that deeper 4-hour pullback, right? And that's basically the plan of action for Friday. What did we get? We didn't quite get the entry that I was looking for there, but then this is just beautiful price action, right? Everything we want to see. High time frame mitigation. We get the chock, right? We take the low, pull back into the supply, and then we got some nice moves to try and take advantage of. So very, very simple price action. And this is what I mean about you don't need to try and catch these reversals to try and play pullbacks. You can literally just be patient, wait another session, wait another day, right? You don't have to try and get caught up in trying to short all of this. You can still take the longs, right? Obviously they didn't work out in this time, but then once we get switch bearish, go, okay, now the 4-hour pullback is definitely probably ready. Wait for the pullback into an areas of supply. Yes, this one could have worked out, but it didn't. Fortunately, it already had the failed reaction during Asia, so we didn't need to worry about that one too much. Then we get the move up higher, chock, pull back into supply, and then we can start to try and target the sweep of these lows, which, yeah, hasn't happened so far. We did end up reacting off demand. But yeah, that was pretty much the plan of action for Friday. So I'll just quickly show you those entries. So I kind of wanted to show this entry here. This is why, it's valid to take this entry. So I'll show you which I'm talking about, is this supply zone here. But the reason why you don't want to be taking that, in my opinion, it's this supply zone here that I'm talking about, is because we already had the reaction during Asia, and then when price is coming in and giving your entry about 7:45, we've already had the failed reaction. So yes, these could play out and it could go, but from what I've seen, once you have that failed reaction, it nearly always fails. That's the words I'm trying to look for. So this is why, yes, this is a valid trade in terms of the setups. Price comes into M1 demand, it pushes up, it pushes down, you could have got in, and it most likely would have been a loss depending on your management. But I did want to talk through that trade, if any of you guys took that, and why that POI wasn't really a great trade to be looking for. It was just generating that liquidity to push up higher. Now, we just missed the M15 zone, essentially, reacting from the M30 supply again, but not to worry. There was a 15-second flip that you could have seen within there on the M1 candles, but we ended up getting that M15 change of character. This is where you don't need to chase it, I should say. We just created a fresh area of supply, wait for price to come back into that. This time, fortunately, it did hit my alert, and then there was just a very, very standard entry here. So if you actually look at this, right, price is bullish, and then it comes back into demand, but it does make a higher high. So at this point, everything's working fine. Then we come down, and this is where we come into this area of demand. And then as soon as we react, that's where I mark this wick as the low of the reaction. I'm waiting for the close below. As soon as we got that closure below there, I know anywhere within that whole reaction, that whole buy to sell, is where I want to get short. So I just took the whole range, 2 pip stop right, so I entered on the EQ so I could get my 2 pip stop protection. But you could have tidied this up a little bit and just refine that to the wick, right? We can that's your equivalent of getting essentially the buy to sell candle, but obviously on the 15-second time frame that went on to push the low. But I just took the whole range there, just a little bit easier. Brings you to pretty much just the same entry, right? And then that was your very, very simple tidy trade. So change of character, higher time frame mitigation. There's your flip. Now there was another one if you missed this initial entry because it was a little bit messy, and this is something I'm trying to work on is these kind of continuations. As they're a little bit trickier. This is kind of my bread and butter, right? High time frame mitigation, M15 chock, pull back into M15 POI, M1 chock and flip, boom, you're off. But I kind of want to work on trying to get a little bit more aggressive with either scaling in or entering further in the M1 leg if I miss the initial move, right? So this is where we have that reaction, push down, and a pull back straight into it. So hopefully you can see that pretty simple entry there, or a scale in if you're already short. And then obviously trying to target that next M15 lower low, or take some decent volume off at that next demand zone for just shy of 9R there, and then just typical end of Friday, just chopping around, sticking within that range. So that kind of wraps up the price action for Thursday and Friday. So in terms of the forecast for the higher time frames, kind of got these all mixed up now. So weekly chart, we have to remember, right, we have just swept those major kind of weekly lows / daily double bottom, big liquidity pool, right? We could see a bit of a pullback up into this range here, or potentially even this inside bar, or of course we could just pause here, right, and push a little bit lower. But now the 4 hour has switched bullish. I am kind of viewing that as a potential sign we could definitely be pushing up a little bit higher, which we can also see on the daily chart where we've had that change of character. This is the daily range we're playing within. Right, so we are very low down in the leg, and there is a possibility we could start coming up towards these higher supply points up here. Both of these are kind of flip zones. Right, we have this level of demand. That's the reaction, and really that's where the reaction failed. So I prefer this zone here, but I am cautious, right? These buy to sell wicks are a bit more of a decisional, but I definitely prefer this zone if we were to push a little bit higher up. But really kind of need to see this high get cleared first, because that is a bit more of a minor high. And at the moment, price has tapped into it and it's struggling to go. So although the 4 hour has switched bullish, and at the moment I'm shorting just to play the 4 hour pullback to anticipate that move there. If you do get short now, there is the possibility that we could just go from here, right? And it was kind of just a liquidity grab on the 4 hour, and we are going to come lower before we go. Okay, so just bear that in mind, that could be a possibility. 4 hour chart. So yeah, we've come into this supply zone here. So at the moment, as we know, the 4 hour is bullish, the M15 has switched bearish, so looking for shorts to try and trade this deeper into this zone here. I really like this flip zone. That would be ideal, right? Pull back into demand, and then we push up higher, and then we can look for some potential shorts up here. Obviously just wait for price to switch trend first, right? And then we can target the lows. These aren't, I wouldn't say this is a very strong low. Swing low, you want to see form like that. These lows look like they're going to be targeting for liquidity at later points, so probably would expect price to come into here, change trend, and then we can look to target those lows. But anyway, keeping it simple for the week ahead, looking for shorts down into this level of demand to then push up higher, right? We'll then get that failed reaction, probably create another flip zone, and potentially we could keep looking for higher lows. But there is the possibility that we could go from here, right? If that kind of daily minor high is protected, and we could go lower, or potentially we could be building a little bit more liquidity to push deeper into the zone, mitigate something within here, and then we could go. But main forecast at the moment, because the 4 hour is bullish and because the 15-minute is bearish, is that we're just going to get a bit of a deeper pullback, wait for the 15-minute to switch bullish again, and then we can push price up higher. And that's really kind of complicated as it needs to get. So kind of just clean this up a little bit. 15, this is the range we're within, that's the low, that's the high. We obviously had the pretty clean entry already where we had the chalk, and then you can see supply starting to hold, but now we're just ranging. So coming into Monday, I'd probably try and let that range sort itself out and be patient, either wait for the low to go and then look for, mark out your areas of supply, look for price to come back in to then target that down into here, and then you can look for the longs to catch that move there. Or what we may see, because we actually never mitigated that refined M15 supply, is we could push up onto Monday, which is definitely what I'll be keeping an eye out on, sweep this high here as liquidity, and then we can look for shorts to then get that lower low, and then look for that big 4 hour higher low there. So yeah, that's kind of the main way I'll be looking to approach that coming into Monday. So either looking for another short from this high here, or if we make lower lows, we can start to try and catch those longs from this 4 hour zone. And then I've just gone on, there we are, here's a 15-minute, drawn some zones a little bit higher. Oh yeah, so there was this M15 wick a little bit higher in the 4 hour zone if we do push up higher, and then we have some old supply zones as well, which you guys can go and mark on your charts, that potentially we may come into if we do push up higher at some point during the week. So that's euro dollar. Let's take a quick look at pound dollar and Aussie dollar for the higher time frame forecast. So pound dollar, weekly chart still very much bullish, but for me, we're in quite a massive weekly range and still within the premium. But daily, we've had that big break of structure finally breaking out of that range, which is looking like just one big sweep of liquidity at the moment, but we almost have that V-shape move in and out. So the daily is very much bearish, but I am looking at the kind of the strength of that move, that potentially, that could be, price really wanted to seek aggressively higher prices. We did have these series of mitigations right here. And what does that do? It just builds that trend line liquidity for price to potentially want to target that liquidity for higher prices that is starting to build up. But because that was my swing low, that was my swing high, and we've now had that lower low. Technically this, for me, it's a little bit weird, but that is the daily range we are playing within. So even if we pushed up higher, we could eventually still make that lower high. But just zooming into kind of more last week's price action on the daily chart. Obviously keeping an eye out on the supply zone here, but what was it? Very straight push, no inducement, likely could be to generate liquidity for this move above, which is exactly what ended up happening. Price came in, it reacted. So then on Thursday, when you see price pushing up above the reaction, that's kind of your go time that now this supply zone is definitely going to fail. Well, not definitely, but has a high chance it's going to fail. And that reaction was to just generate liquidity for potentially the supply zone above. But we have also created this supply to demand flip zone here, so at some point that could be used for a potential bullish move there. So we have this nice daily buy to sell candle, but it doesn't look like it quite got engulfed. So if you are being super strict, you could tidy this up a bit. I think I checked the 3-day, that kind of tidies it up. Yeah, if you wanted to take that kind of whole buy to sell range, that could be something you want to do as well if that kind of meets your plan. So yeah, just to kind of summarize the daily chart there, we are bearish, but we have had a big sweep of liquidity and quite an aggressive V-shaped move. But keeping it very simple, not trying to get too caught ahead of myself, main forecast I'll be looking at is for price to come into the zone here and then seeing if we can get that lower low. But I am cautious of all of the liquidity that price may want to tap into above here. But this is a pretty decent little sweep zone there that led to that break of structure. So looking at the 4-hour chart, my swing trend is a little bit kind of zoomed out at the moment, but that's because remember this is the way I'm viewing structure. So just draw the zones. We had that lower low, then we broke out and formed that higher high, but then the high or the low didn't get taken until over here. So that means that this is all one leg. We then switch bearish again. So now for me, the 4-hour range, that's the 4-hour high and that's the 4-hour low, and we've now pushed up into above the EQ, up into premium prices. So let's zoom into here. Now we're coming into quite a kind of important inflection point for the 4-hour chart, because if we look where price came originally into here, so remember we switched bullish up here and then we pulled all the way back down into the extreme, and then we tried to create that higher high, but then what happened? Supply took control, that internal demand started to fail, and then that's when we knew, right, that it was likely this low was going to be weak because it failed to take out the high. And that's eventually then when we switched bearish again and supply took control. But where did kind of that supply really take control is where we had this last point of demand here. Price reacted and it pushed down. And now we have generated potential inducement for price to come into here. We have the daily zone as well to potentially look for that next leg there to the downside. If that kind of, more recent bearish trend is going to stay intact, but of course we could push up higher. So just be ready for both scenarios there. I do like this 4-hour zone as well because it did take the liquidity behind those inside bars, so a bit of a sweep zone and a push down, but we do also have kind of these buy to sell wicks as well, and then obviously this big large buy to sell at the top if we were to push up a little bit higher. But obviously the internal structure is still bullish at the moment, so you may want to wait for a decent change of character before potentially looking to swing those shorts back down, or just keep following bullish order flow as long as it stays, right? If we react but then we push up higher, then we know demand is in control and we can continue to push price even further up. And that's pretty much how I'm viewing the 4-hour chart. So let's just take a quick look at the M15. I noticed this really nice kind of setup on I think it was Friday or Thursday. Friday's price action. Another really, don't need to go any lower than the M15 for insane entries here, right? There's your M15 swing high. We created a little bit of supply, price reacted, and then that was the decisional demand that pushed price up. We came into it and then we reacted off. Now you don't need to know that this is going to be the one that holds, because what can we use to help us with that is we wait for the change of character. We wait for the internal structures to switch bullish again. So that's where we had that low get taken, which means this is a high. Price mitigates this flip zone. We get the change of character. So then coming in, what's this? About 6 a.m. So coming to your desk, right? If you're kind of trading pre-London, and you can go, okay, what's happened? You see what's happened. You've built this story. You can see there's decent RR up to the next swing high. We have our change of character. Okay, there's two POIs here, kind of here or here. Well, this one's been mitigated, so following the order flow. Okay, boom, that's where I want to get long. These drawings. Target, the high was stopped below the low. Boom, there's your 11R. I just, there's kind of just a message to myself. I just keep saying this week in, week out, but the 15-minute is just so powerful, and kind of just, even chucking in another couple of pairs with Aussie dollar and pound dollar on top of kind of your intraday, trading on euro dollar, it can really massively add some nice R to your account there. So coming up into this most recent 4-hour zone, we do have a couple nice M15 zones refined within that. Obviously, you can go and refine these down to M1 or even lower if you wish to do so. but I'm just going to go over the M15 for now. So the reason why I like this is because we kind of have this bullish pullback, right, with bullish order flow staying intact. Price comes into it, right, we're still bullish at this point. Then price sweeps this high here, and then this is where supply takes control and demand starts to fail. We pull back in and we mitigate that zone, so that price should be mitigated now. And then this is where pricing came into this area of demand here, right, this range. It reacted, it pushed up, then it came down, came into this last area of demand, it pushed up and it came down. So both of those pushes up, right, those buy to sells are now unmitigated, and this is the two areas that I'd be looking at, these two flip zones nested within the 4 hour zone, which could be decent areas to look to short from. So either trade from these directly or wait for a bit more confirmation on the M1, or be even more safe and wait for that M15 change of character, and then you can look to initially anticipate that pullback. Then if you get the M15 trend change, then obviously it could be go time for that much deeper 4 hour pullback, or potentially even the daily bearish trend taking over, and you could be in a decent swing trade there. So yeah, that's pound dollar. I think we could get some decent shorts from here. Really like these 4 hour zones, but just be cautious, right, that the 4 hour bullish order flow could stay intact, and if we start to see those reactions fail, then it's likely this demand isn't going to hold, this supply isn't going to hold, and we may be pushing higher to tap into all of that buy side liquidity resting there. And then last but not least, we have Aussie dollar. So starting to get a very nice reaction off that weekly demand zone, right? We obviously had that change of character, pull back into demand, and now it's looking like we may be pushing higher. We never quite mitigated that refined daily demand zone, but of course we don't have to. We generated liquidity, we swept it, and now we're pushing up. We're coming up to this very, very minor supply zone. It's minor because it didn't cause anything, right? It didn't cause any break of structure really. Kind of just following the mitigations here. So we could see a little bit of a reaction here on Monday and Tuesday for then price to push up higher. Obviously there is a possibility we could come lower, but I think it's likely we will take these highs now, simply because of the high time frame mitigation and that first initial change of character that we have seen. So just try and keep it simple for now. 4 hour chart, yeah, it just kind of slowly just chucked its way up each week, just kind of following the series of mitigations. So there's probably some really nice trading opportunities to get involved with last week on Aussie dollar, but we've now come into that minor daily supply zone and this 4 hour zone as well. But we are bullish, we are within this range. So for me, the 4 hour range is the same as the daily range, but the internal structure is obviously bullish, right? We've got that change of character there, got a bit more of a significant minor breaker structure there, and we've pretty much been bullish ever since. So old supply just generally becomes reaction points for price to push up higher. So really ideally be looking for longs from these zones down here. This one took liquidity, it's kind of that last real swing mitigation. So kind of like both of these zones, definitely to push up higher. But of course, if we come into here, right, and we get some nice changes of character, you can look to play the shorts down into these levels as well, with the potential, don't think it's too likely, but with the potential we could come down lower from there. So yeah, Aussie dollar is very, very simple at the moment, very, very simple forecast. We have come into that 4 hour supply zone. We have now had an M15 bearish trend change, or at least for me, the way I map structure. Very nice extreme sweep zone up here, right, taking the liquidity behind all of these highs. So yeah, Monday morning or Tuesday, whenever price, or if it gets into here, would definitely be looking for some decent shorts. Minimum target down towards these lows, with the potential we could come down even lower into these 4 hour zones here. Before then, potentially we may get those longs from down there, right, to try and catch that low, to try and break up and form that next daily higher high. So yeah, very, very clean price action on Aussie dollar at the moment. I've just drawn on some refined M15 zones within those 4 hour zones as well, where you may want to look for potential long entries. But of course the M15 has now switched bearish, so you may want to wait for the M15 to switch bullish again before really trying to kind of swing those moves. But yeah, the Aussie dollar is looking super, super clean at the moment, so I might keep a bit of a closer eye on this for the week ahead. So yeah, that wraps it up. I hope you guys took some value from this. As always, hope you guys have a good weekend. And we have the Zoom call on Monday. I think that will be the 18th. So I look forward to seeing anyone of you guys who can make that. So have a good week, and I'll see you later. Cheers, guys.